Real estate exploded to new heights leading up to the financial crisis. Property valuations looked similar to the dot-com boom and bust. The catastrophic losses which occurred were felt globally, from Nevada to Dubai. After a short correction in prices, the boom continued in certain areas. Vancouver is just one example. With prices rising so fast, it became completely uncontrollable. So what's happening now? Well, you came here for the truth, so let me unveil that for you. We're going to talk about Vancouver today. We're going to talk about real estate today. We're going to talk about China today and a few other things. Let's get into it right away. Beginning with this, there's, basically two articles that I want to show you on this topic. There's way too much in it, but let's see what I can cover in this time. The deep-pocketed foreign real estate buyers Vancouver has become famous may be gone, according to the latest numbers. Foreign transactions, check this out. So the foreign transactions above $3 million are dropping fast. No, foreign buyers didn't disappear. They're buying lower priced units, and it has more to do with China than BC's tax. And I believe it is both, actually, but we'll get into this. Foreign buyers looking for Vancouver's luxury real estate declined very fast. According to the most recent numbers, the homes over $3 million declined by a whopping 91% from the July peak. That's a huge decline in such a short period of time. Only 8 luxury properties were bought by foreign buyers in November. In case you're wondering, November is the last data point that was published, and it goes on, saying December is nothing to brag about either. So let's look at this just quickly. This chart, if I can resize it appropriately, foreign sales above 3 million, you could see exactly what has happened. I mean, yes, it did peak. It was going up fast, but the trend is clear. So what's this all about? What are they talking about here? Well, if I move forward along in this article, it's not the tax, it was China. Now remember, I'm not agreeing with what they're saying, but let's take it for what it is. We should consider China's involvement before we thank the BC government. 2015 was one of the largest years for outflows in China. And I believe this is key, and slowed with the February 2016 crackdown. BC experienced a decline in sales from that month on. Okay, that's a fact. They implemented the foreign buyers tax of 15%, and immediately it had a decline in sales. That's a fact, although prices continued to climb. Capital then slowly poured out of China until November, when the State Administration of Foreign Exchange reported that foreign exchange reserves approached the $3 trillion mark. It's a psychological, it goes on. We're looking at the bottom here. New crackdowns occurred as this number approached, which reduced the outpour. December saw only 41 billion leave the country, 20% less than what the analysts were expecting. They didn't stop though. The new restrictions were further added to reduce foreign exchange of capital last month. So China is engaging in capital controls right now at this time. They are doing so for various reasons. There is the, let's say surface level reasons, where the government wants to be able to not have so much of the wealth leave. They want real estate to be purchased there. They don't want new projects to be opened up in other places if the money would be better suited in their own country. At the same time, you have currency wars which are taking place, and you want sort of this vast amount of cash, sometimes your own currency, to flow out of your country in order to then purchase dollars. So you basically take your currency, you're printing it, you can have it go overseas, and then those dollars, or currency, is then converted into, in this case, dollars or Canadian dollars, whatever it might be. So that's one other side. I believe it's both. I do believe that the tax has an effect, as well as the capital controls have another effect. You can't just say it's one or the other thing. China's escalating crackdown of capital outflows is sending shudders through the property markets around the world. In London, Chinese citizens who clamored to purchase flats at the city's tallest apartment tower 3 months ago are struggling to transfer their down payments. Developers are facing big problems. The guy's saying everything has changed. They're finding it difficult to send money offshore. And this is a huge problem because of everything that has been going on. We have seen the restrictions that have been taking place clearly having an effect immediately, an immediate effect, not down the road. Less than a month after China announced fresh curbs on overseas payments, anecdotal reports from realtors, and sometimes the anecdotal reports are sometimes better than what we see as facts. In any court case, in fact, sometimes this anecdotal evidence is more reliable than witness testimony. And that's also a fact. Anecdotal reports from realtors, homeowners, and developers suggest the restrictions are already weighing on the world's biggest real estate buying spree. While no one expects Chinese demand to disappear anytime soon, it's deterring the first-time buyers who lack offshore assets and the expertise to skirt tighter capital controls. That's something that is occurring at this time. Very clear, very obvious. Let's move on. This Chinese company is now SeaWorld's largest shareholder. More acquisitions by Chinese corporations into US and others' infrastructure. They are buying up companies. They are buying up land and farmland and all sorts of different things. And it's not just geographically, focused area or particular sectors. It's everything. Now, in general, I've said this 100 times before, but I have to explain it every time. In general, there's nothing really bad about that, okay? If somebody wants to buy something, these are so-called capitalist environments where they should be able to go in and buy what they want and pay the fair share, and that's it. However, the problem is that a lot of these corporations are run, at least indirectly, by the state. So when you have government buying up corporations, buying up infrastructure and everything else of different countries, it gets a little sticky. It's not so black and white, and you start to run into this gray area and then concerns later down the road. What if the countries go to war? What if there's Cold War or tensions or anything else? They could begin to shut off these different acquisitions that they've made over the years. That's what worries me about all these acquisitions, about Hollywood. Look at what's happening. Obviously, they are, with the way that the Chinese media is run, it's even more tightly controlled than what is in the West. So you're not going to be able to be critical in movies as if you are already. But that's being shut down as well. It's dangerous, very dangerous. This is just a couple things that I want to show you here. What do you think is the currently most overcrowded trade? That would be, by far, long US dollar. The US dollar, of course, had taken a bit of a hit over the months. However, you can see here in this case, it seems to be definitely overcrowded. And I believe that's because the world is looking for safety. Cashing out, the share of non-cash transactions as a percentage of the total volume of transactions. Okay, that's the x-axis. So you can see here going in this direction means basically there are more people using things other than cash. And I will just highlight in here this one right in there. Okay, so what we have, if you can't read it, Finland, Norway, Denmark, Sweden, and Canada, all using the majority of their transactions. Almost, in Canada, for example, it's above 80%, and most of them are as well that I selected, of non-cash transactions. It's like, in Canada, if you pull out cash, or at least in Toronto, if you pull out cash, it's weird. Like it looks strange. That's how few people are using cash these days. And, there's obviously benefits. There's obviously negatives to it. The negatives are very, very clear. to me at least, because they can track all your purchases, they can monitor it, and then they have this ability to shut you off should they choose to. And then the increase in the non-cash transactions is on the Y. So that would be, how fast is this accelerating? And as far as I'm concerned, when you get to this side anyway, like for example, Canada, they're using non-cash for a while. And you could see that Finland, Norway, Denmark, Sweden, they are rapidly increasing in the amount of non-cash. And I believe that this is all leading towards a cashless society. Moving on. Barclays central bank policy forecast normalization at different speeds in different ways. I'm not going to give any opinion on this. I just wanted to show you this. I thought it was, I've never seen a diagram like this, so I thought it would be important to show you the different central banks, the Fed, the ECB, the BOJ, and the BOE, all have a different policy right now. And you can see that it's showing you basically 2017 and onward what the projections are, that the Federal Reserve, for example, in small increments will be able to raise interest rates. It shows you how much percentage of GDP their balance sheets are. And you can see actually there's at least in these three here, $4 trillion approximately in all cases. I find that just coincidental. That's all. And it just shows you some other things. If you're interested in the link will be in the description below. Should you check. Domino's will begin using robots to deliver pizzas in Europe. This is something that it's a trend. It's a big trend, in fact, that has been going on, where the objective is to take away the monotonous and simple tasks from human beings so that we can relax, we can rest, and we can take it easy. However, we sort of need this thing called money in this world. And if all of the jobs, even the low-paying service jobs, are being taken away by robots, we are in big trouble. If you found this video informative, please give me a thumbs up. And last but not least, if you found the video informative, I know you'll find my books, The Money GPS and Global Economic Collapse, even more informative. They have this look inside feature at Amazon, and it allows you to flip through the pages of the book so you can see if you like it. Take care. If you're still here, I'm sure you're one of the good fans, one of the good subscribers of my work. I wanted to thank all of you for all the positive comments on the previous video I did. A little silly video. I'm not going to do things like that often, but once in a while it's good to just have a little fun. That's all. Thank you all for those comments. Truly appreciate it. Another point I wanted to make was that I am planning, so my plan was to create audiobooks of my books. Unfortunately, because I'm a Canadian, apparently I'm not allowed to do that on Amazon. So I'm looking around for other options. I'm just going to sell them on my own website. That's it. So you can go there, you can pay with your credit card or PayPal or whatever. It's all secured by PayPal. And you'd be able to go in there, buy it directly from me, and then, PayPal takes a small little cut, and then, I would get the rest of that. And that's just the way it's going to work. I don't want to have to do it that way because there's more complications involved. If the website goes down, if this and that. But apparently Amazon hasn't opened up to the Canadian market for audiobooks yet for whatever reason. So I'm just going around it. I'm just going to do it myself. I'm going to record the audiobooks. I'm going to sell an MP3 on the website, and I hope that you appreciate that. I'm also going to create the PDF versions of both of my books. So if you want to buy them directly from me, if you're one of those individuals that said, look, I don't want to give a dime to Amazon. Well, you can then buy the PDF directly from my website soon. I'm going to set all this up soon. So I know a lot of people have expressed the fact that they don't like Amazon. So you'll be able to do that. You'll be able to then basically give me all the profits instead of giving some of these big corporations the profits. It's a PDF version, which isn't as nice, but if you have some sort of, maybe on your phone or maybe on your iPad or computer or whatever, you can read it from there. So that's that. And stay tuned for a lot more information, a lot of different things that I'm coming out with. Just stay tuned. I know you'll appreciate it. Thanks.